This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. Okay, really quick, whether you were alive or not even born yet, take yourself back to 1997. You're calling yourself someone who works in tech, which means you are sitting at a desk at America Online. The dot-com bubble has still not yet even reached 1999, where the NASDAQ went up 100%. But let's just say that 1997, the dot-com bubble was rocking and rolling. Then we got the summer of 1998, long-term capital management. If you don't know what it is, go watch the film The $1 Trillion Bet. Connecticut hedge fund, John Merriweather of Salomon Brothers fame, of Liar's Poker fame, the book by Michael Lewis, they essentially blow up. Their whole business model was picking up nickels in front of a steamroller, and the steamroller ran them over. Now, at that exact same time, summer of 1998, trend-following traders made a bloody fortune because they were on the other side of long-term capital management's nonsense. Then the bailouts started. Long-term capital management was bailed out. Put to bed, but bailed out. Trend-following traders would have made a hell of a lot more money if the Fed didn't step in and start playing games. But that was enough gasoline on the fire. And wham, bam, thank you, ma'am. 1999, as I just mentioned, the NASDAQ was up 100%. Michael Saylor, yes, of Bitcoin fame, Michael Saylor, worth billions of dollars on paper at that moment in time, went on 60 Minutes and basically told everyone he was going to run their healthcare. MicroStrategy's stock dropped like a rock in the days that followed. And that was the first stock that precipitated the dot-com crash. I think it was March of 2000. Rock and roll again. We get to the fall of 2002, and the NASDAQ finally bottoms out. Well, now what's happening now? We got those rates down really low. Everyone watched the movie. Everyone saw The Big Short. Rock and roll again. Here goes real estate. Here goes stocks all the way up to 2007. Shit's starting to hit the fan again. We get to the summer of 2008. Bear Stearns, Lehman Brothers, October of 2008. Paul Mulvaney, one of the traders that I feature in my work, up 45% October of 2008. Wow, what a number. Hell, who knows how much he would have been up if the Fed did not once again step in and play hanky-panky in the fall of 2008 and into 2009. Wham, bam, thank you, ma'am. Here we go. Now a decade of QE and ZERP. Gets us up to 2020. Little pandemic fun, right? Some rock and roll. The equity markets crash again, and here comes the Fed again. And that brings us into 2022. Trend following trading has been kicking royal ass in 2022. Now, do you see what I just did there? I laid out the through line. It's all connected. This has been one big fucking kick the can down the road routine all the way back to long-term capital management. Now, for some of you out there with even more wisdom than myself, and I'm not saying that I've really got any wisdom, but I kind of know what's going on a little bit. You might take it all the way back to Nixon going off the gold standard. You might take it back to the 87 stock crash. But any way you slice it, these events are all connected. And the people at the top are just fucking everybody because they are creating a system where the average Joe doesn't know what the hell's going on. The average Joe feels he or her must be long only at all times. And then at various points in time, the elites, the Fed, they take away the punch bowl. Then you might have 10 years of no performance. We very well likely could be at that moment right now. So across that 25-year storm, 25-year shitstorm, trend following has excelled when things have gotten out of hand. Now, it's excelled at many other points in time too, but it excels especially well when the proverbial shit is hitting the fan, like right now. So my challenge to you, and in this episode, I'm going to give a few chapters from my book, Trend Commandments, the audiobook. My challenge to you is, do you want this? Do you want this lifestyle where it seems like everything is going swimmingly, but then all of a sudden they take away the punch bowl and you start wondering whether or not you got enough money to eat, whether you can afford your car, whether you got to sell your house? This is no way to live. The people that are doing this are psychopathic. Now, the other argument could be that they're not psychopathic. They're just doing what their constituents want. And Americans leading the pack just want to believe that they are brilliant, rich, wealthy for, frankly, doing nothing. Now, of course, there's some brilliant people in America. There's some brilliant corporations. But everyone doesn't get to be at the top for doing nothing. Unless you get zero interest rate policy for over a decade. Unless you get quantitative easing for over a decade. Then everyone gets to pretend until the you-know-what happens, like has happened in 2022. Now, I just laid out a bunch of different crashes going back to 98, 2002, 2008. What's the difference today? Inflation. The Fed is fucked. If they don't combat inflation, we all know what happens. And if they do combat inflation, we all know what happens. So the kicker is, what are you going to do to take advantage of those if-thens? Because we don't know which way it's going to go. I can't predict a damn thing. You can't predict a damn thing. Larry Hike can't predict a damn thing. Jerry Parker can't predict a damn thing. No one can predict a damn thing. So what are you going to do when you can't predict? What strategy are you going to take that reacts to what's going on right fucking now? Because reacting to a market movement, reacting to the price movement, reacting to a potential trend, that's all we got. Everything else is just, flipping on CNBC or Bloomberg and listening to a bunch of stuffed shirts that have literally been on those channels saying the same shit, in some cases for over 30 years. And some of you people listening right now, tune into that shit. This is the challenge. Now, I can't tell you if shit's going to hit the fan tomorrow. I can't tell you if it's going to hit the fan next month or next year. But go look at assorted charts around the world and look how extended assorted markets are. And start to think of these markets as rubber bands. Because once you get into that mindset of how far things can stretch, how far they can go before there's a break, and not necessarily knowing which direction the break might go. And we all know that what's happened since 2008 has been a scam. Even if we benefited from it, it's been a scam. No interest rates, QE to the moon. Everyone knew this was a big sell crack to every kid on the street corner and get them addicted. And here we are now. But I'm about solutions, and trend following is a solution. In the spirit of getting you on the right path, what follows are 3 chapters from my book, Trend Commandments, which you can find on Audible. And in the collector's aisles, you can still find a hard copy. One of my most fun books to create, a kind of breezy, easy trend following read, but very tight. Or at least that was my intent, to make it tight. Without any further delay, let's jump right into these 3 chapters. And by the way, if you've got any questions, if you really want to know what to do, if you're confused, if you are questioning the strategy that you got, I can help. many options, many ways I can help you. From my books, from my podcast, my website is filled with thousands of pages of content. And of course, my flagship product for those people that really want to go the extra mile with my personal support. So if you do have any questions, I'm easy to reach. Michael@covel.com. Jump in and enjoy the following 3 chapters from my book, 10 Commandments.
Chapter 6. The mother of all evil is speculation. The most valuable commodity I know of is information. Wouldn't you agree? Note, those 2 quotes are from the film director Oliver Stone. Speculari. The film director Oliver Stone believes that speculation is evil. That's interesting. He has written some fantastic scripts. He has directed Oscar-winning films. Nevertheless, to say that speculation is the mother of all evil is disingenuous. When Oliver Stone sets forward to make a new film, he's speculating that you will spend your money and watch his film. There is nothing wrong with that. That's life. That's a good thing. Speculation in markets is essential too. Think about what drives a market. It is millions of people speculating to make money. One of the most successful trend-following traders knows deep down how important speculation is to finding opportunity. Speculati, or the Latin root of the verb to speculate, has the literal meaning to observe. To be successful, this observation must, of necessity, be detached and unemotive, and thus where great social and moral issues are at stake, it is perhaps not surprising that distrust and hostility among the general population can arise, particularly when the speculator profits at a time of general discontent. Yet this detached observation is clearly in the spirit of the natural scientist, and the act of speculating for money is in the spirit of the empirical scientist's restless yearning to add to empirical knowledge and put theories to the test. Regardless of whether you win or lose, you are speculating, trying to get ahead. Every time you get into a car, you are speculating. If you go to the Apple Store to buy an iPhone, you are speculating the phone is more valuable than your dollars. Additionally, you are speculating the iPhone will work. When you turn on a show, you are speculating that it is worth more than something else. All of these activities don't always work out, and that is the nature of speculation. All speculators are not winners. So why is it bad to take advantage of an opportunity that you recognize? It's not. Speculate this. Do you consider yourself an investor or a trader? Investors put their money into investments hoping value will increase over time. Typically, they have no plan if it goes down. They usually hold on, praying value will reverse and go back up. Investors typically succeed in bull markets and lose in bear markets. They usually have no coherent response when the losing starts. They often hang tight and continue to lose even more. Traders are different. They have a defined strategy to put money to work for a single goal: profit. Wise trend traders do not care what they buy or sell as long as they end up with more money in the long run. Bottom line, winning traders don't invest, they trade. It is a massive distinction. Consider timeless qualities essential to speculation. 1. Self-reliance. A man must think for himself and must follow his own convictions. Self-trust is the foundation of successful effort. 2. Judgment. That equipoise, that nice adjustment of the faculties of one to the other, which is called good judgment, essential to the speculator. 3. Courage. That is confidence to act on the decisions of the mind. In speculation, there is value in the dictum, be bold, still be bold, always be bold. 4. Prudence. The power of measuring the danger, together with a certain alertness and watchfulness, is very important. There should be a balance of prudence and courage, prudence in contemplation, courage in execution. 5. Pliability. The ability to change an opinion, the power of revision. He who observes and observes again is always formidable. I don't care whether you ever trade, but those precepts should be the first life lessons taught to grade school kids. Chapter 8. A prophet is not someone with special vision, just blind to what others see. Everything flows. What is a trend? The question has hit me for over a decade. You don't spot trends. You don't find trends. You react to market movements, and hopefully at the end of a big move, a big trend, you will have made great money from that big trend. Consider an example to better make my point. A new trader asked, "I am new to trend following and wish to ask you what your favorite chart is for determining a given market's trend. Daily, weekly, yearly, hourly?" One old pro trend trader responded, "Your list lacks options for minute, second, and millisecond. If you want to go for the really high-frequency stuff, you might try trading visible light in the range of 1 cycle per 10 to 15 seconds. Trading gamma rays at around 1 cycle per 10 to 20 seconds requires a lot of expensive instrumentation, whereas you can trade visible light by eye. Higher frequency trading succumbs to declining profit potential against non-declining transaction costs. You might consider trading a chart with a long enough time scale that transaction costs are a minor factor, something like a daily price chart going back a year or two. All trends are historical. None are in the present. There is no way to determine a current trend, or even define what current trend might mean. You can only determine historical trends. And the only way to measure a now trend, one entirely in the moment of now, would be to take 2 points, both in the now, and compute their difference. However, with that limitation in mind, you can proceed to define, compute, and use trends. That's no philosophical wordsmithing. It is critical that you let the distinctions sink in. Chapter 9. You don't need to know what will happen next in order to profit from whatever happens next. Systematic trend following. What is trend following trading? The first part is trend. That is very straightforward. Every trader needs a trend to make money. Following is part 2 of the phrase. Trend followers wait for a market to move first, and then they follow it. Now, some argue that the term trend following is too imprecise. Others use terms like global statistical financial analysis or managed futures to describe the strategy. That debate will not be solved here. If you do not like the phrase trend following, substitute your term as you keep reading. Trend following trading is reactive. It does not predict market direction. Trend trading demands self-discipline to follow precise rules, no guessing or wild emotions. It involves a certain risk management that uses the current market price, equity level in your account, and current market volatility. Trend traders use an initial risk rule to determine their trading size at entry. That means you know exactly how much to buy or sell based on how much money you have. Changes in price may lead to a gradual reduction or increase of your initial trade. On the other hand, adverse price movements will lead to an exit. A trend trader's average profit per trade is significantly higher than the average loss per trade. Trend following aims to capture the middle or the meat of a market trend, up or down, for profit. You will never get in at the absolute bottom or get out at the absolute top. Stocks, ETFs, leaps options, bonds, currencies, futures, and commodities are all ripe to trade. This is the only trading strategy that can be traded on a desert island. As long as price data is available, all else is inconsequential. Media, fundamentals, broker options, talking heads, and so on are simply not necessary to profit. Yes, initial discretionary decisions must be made as a trend follower, such as choosing a trend-following system, selecting a portfolio, and determining an appropriate amount of risk. However, after the basics have been set in motion, you can systematize trend trading rules and automate your daily trading life. This is not day trading, where you are glued to the screen all day in some Red Bull-induced hyperactivity bender. However, you have to maintain agnosticism to market direction for trend trading success. Unfortunately, not everyone comprehends or wants to comprehend that. Consider Erin Burnett of CNBC. She was interviewing David Harding, a successful trend trader, and asked, "A lot of people obviously want to know what your secret is. What is the magic bullet?" Harding replied, "The secret, strangely enough, is not having an idea of what we are going to be doing in advance. We react to the unfolding market's trends rather than make forecasts of what's going to happen." Burnett missed his point in response. "When you look out right now, do you think, big picture, I know you are quantitative, but do you believe that we are in a fundamental cycle, or are we in a bubble?" Harding, "It's not false modesty for me to say I don't know. I really don't know. I really do not have the gift of second sight." Consider fundamental investor John Hussman. His writings are always insightful. He makes a cogent case for an out-of-control Fed and Congress, but consider an excerpt from his recent letter. "In hindsight, I frankly underestimated the willingness of investors to believe that the underlying structural difficulties of the economy, which still persist in my view, were so easily solved by disabling fair market accounting disclosure and repeatedly violating the provisions of the Federal Reserve Act. In any event, it is my job to not only defend capital, but to achieve returns despite the recklessness that policymakers choose to pursue." Trend traders use an entirely different type of analysis, not based on traditional reasoning. Trend followers do not have Hollywood narratives to explain market bubbles on top of bubbles. A trend follower does not have to know any of the things Hussman laments not knowing. Buy things that have gone up on the theory that they will continue to go up. Short things that have gone down on the theory that they will continue to go down.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.